Alright, welcome back everyone to another video. It's been months since I've uploaded a market recap, but I'm officially going to be starting it back up again. And not only am I going to be doing market recaps every day, but I'm also going to be uploading a short form video every single day. I really do want this to be the week that changes everything. I want to be live streaming every day. I want to be completely transparent with you guys, and I want to create one of the best trading communities out there. So, with that being said, I'm not going to try and make these videos perfect like I used to. I'm not going to try and overcomplicate everything. I'm just going to talk, and a lot of the time in these videos, I'm going to start off with something interesting, some kind of a rant, because I think that always makes things more interesting. If I don't go straight into the market recap, if I talk about something that I think is interesting. So today, I'm going to talk about why trading isn't taught in schools, at least my opinion on why trading is not taught in schools. And in order to explain it, I'm going to tell a story about Nikola Tesla. So you probably know who Nikola Tesla is, but Nikola Tesla, it's not a name that's normally taught in schools, like Thomas Edison, like Wright brothers, like like Henry Ford. Those are names of inventors that are people that invent things and invent machines that you learn about in school. But the difference between them and Nikola Tesla is Nikola Tesla wasn't just an inventor, right? He was an inventor and he was a thinker, and he challenged the way things were. And the people in power don't like people like that. And so you don't hear about Nikola Tesla much because of the things he tried to do. Like, for instance, he tried to make energy completely free for the entire world. So he goes up to JP Morgan, he's like, all right, so I have this idea for energy for the entire world. I'm going to build a tower, and I'm going to basically give the entire world energy. And they're like, okay, we'll fund you. And then later on, he builds the tower, and JP Morgan is like, okay, so how are we going to make money from this? And he's like, it's going to be free for everyone. And JP Morgan destroys the tower and cuts the funding for this electrical tower, for this tower that's going to basically power the entire world. And so it's ironic because it's a lot like trading. It's the same reason trading, in my opinion, is not taught in schools. Because when you understand how the markets move and you understand trading, you're gonna make money, right? And money is power, and power is control. And people, they don't want people knowing how you can just print money on your phone. Like, the elites, the people in power, they really don't want people knowing that you can just print money on your phone. The same reason that JP Morgan said we don't want to make energy free, because money drives society. I mean, that's just the reality of it, right? So anyway, that's my opinion on why trading is not taught in schools, is because money is power and people are corrupt. And so anyway, hopefully you found that story interesting. But anyway, today we're going to be looking at the market. We're going to be covering trades from Doji, Dino. I call him Dino, but it's probably not what his name is. So Doji, Dino, and yeah, I'm going to talk about a couple of trades that I liked as well. With that in mind, let's jump right into it. So, I did live trade today, as I will be doing every single day from now on. And I didn't take any trades. Now, I could have taken some trades. There were some trades that I considered taking, but I'm trying to be extra conservative because I really do want to turn profitable. I don't want to have it take longer than it should by taking something that's not like the perfect setup. But if I was to redo today, as I'll get into, there's 2 trades that I would definitely consider taking, maybe 3, right? So we'll talk about all of those. So the first one is the one Doji took. And so Dodgy outlined in the morning that we had this consolidation. We came down, and this is a giant fair value gap right here. 15-minute fair value gap. And so we come down into this fair value gap. Here, I'm going to mark this out as a fair value gap. And then right here, we purge this low. And then on this candle right here, on the 5-minute, we inverse this fair value gap. So what happens after, right? We end up running back to the highs, or running back to this consolidation. And actually, this is something that I'm going to make a short form video on fairly soon, but it's basically just measuring out where the most transactions happened in any given range. So if I go like this to here, boom, you can see that this is measuring, the way I have the settings on this is the blue lines represent like where the most liquidity is, like the top 20%. So this is the highest concentration of transactions, right? So that's where the most liquidity is essentially going to be. So that's how I mark out liquidity pools. I'm going to make a short form video on that. But you can see here that that's where the liquidity pool was. And you can see after we inverse this, right, stop loss goes at the low of the candle that created the original candle of the old fair value gap. So right here, stop loss goes right here. And Dodgy ended up taking this, and Dodgy ended up making $10,000 today, which is crazy. So go watch that video. Insane trade. Good job, Dodgy. You can watch the stream. I was very, very close to taking this, but I'm just being super, super cautious. I probably should have taken this, because the nice thing about this is you can just go break even here, right? Even though you have this external gap, you can just go break even at this high. And that makes it so it's not as stressful, because you know we're at least probably going to run to this high. But still, I was definitely just trying to play it safe. I don't regret not taking a trade. I think it's okay. But in hindsight, this was a good trade, and I maybe should have taken it, right? We inverse this. We sweep out this low. And yes, we have this external gap, but look at this consolidation, right? You have to understand the market in terms of consolidation, right? This is where people are going to get stopped out. So this is a lot less of a gap right here, and this is a lot more of a void because we instantaneously dumped. So it's a lot less of a gap, and it's a lot more like a liquidity void. So you can see we end up coming back and fill that. If you don't know about liquidity voids, go watch that video on liquidity voids. Basically, the market will come back up to liquidity voids and fill them in, right? That's essentially how it goes. Anytime you have an instantaneous move, it's inducing people to get in on that move, and then the market comes back and fills that. Essentially is how it goes. So that's the first thing. First trade, Dodgy took this. Now, let's say you weren't super sure, like me. So I saw this and I wasn't sure if, like, I loved it. If I was still on the charts, which I wasn't, I probably would have taken this one. Where later on, we've already inversed this, so you already know the bias is bullish because we inversed this on the 5-minute. We come down, and then on the lower time frame, we have a sweep here. And then we have a old fair value gap right here. And we close above on this candle. So let's say you missed this initial one. You already know the bias is bullish because we inversed this on the higher time frame. So on the lower time frame, we have this one. And when this inverses, here's another entry. And this one's a lot more precise. So once we inverse this, stop loss goes at the low. I'd put at the low here of this old fair value gap. Now, sometimes you just have to use common sense, right? If it's like low is all the way up here, maybe just give yourself a little bit more room. But yeah, stop loss fits that pretty well. And then right now I'm just trying to target like anywhere between 1 to 2 R. I'm trying not to go anything crazy. Theoretically, you could target this, right? Because you already know the higher time frame one inverse, but I'm just targeting like 1 R, 2 R. So I'd probably just target the end of these bodies here, and this would be a nice 1.5 R trade or 1.3 R trade. So that's how I would have done it if I was on the charts now. Once again, I get off the charts at 11:10. My trading window for live trading is from 9:30 to 11:10. I'm trying to keep it like that. So anyway, there's that TP, and yeah, that's a nice 1.4 to 1. I'm really trying to stick to 1 R or 1 to 2 R, just so I can just consistently make profits. I'm not I'm it's fun to get these higher trades, but I'm just trying to make money at the end of the day right now. I'm just trying to make money. And so with that in mind, you just got to give yourself you got to be a little bit realistic. You can't go crazy, and it's really annoying if you take these higher trades and then they're up in profit, you get stopped out. It's just not ideal. So anyway, and then with this, you could definitely go break even pretty fast, right? You could definitely go break even at this high, but once again, break even comes down to screen time and a lot of personal preference. So, but this is where I would go break even on this one, and then you can see we run up to TP and we don't really get stopped out at break even. So, or maybe I'd go break even here. So anyway, probably this high. And then we also had this trade from DNO, and this one, I almost took this. I was so close to taking it, but once again, I'm just trying to be extra conservative. But we had an SMT at these highs here, with this high and this high, SMT. And we end up sweeping out the candle bodies here. And since we already swept out this high on ES, well, one, sweeping out candle bodies on its own is still a sweep, right? This is still a sweep. But especially because S&P took out the high, this is very valid for an inverse fair value gap, right? We swept out the bodies, S&P took out this high, we get SMT, and NASDAQ sweeps out the bodies. And then here's where it gets interesting, because you probably want to wait for the highest time frame to inverse, and so that's the 3 minute in this case. And you can see we have this old fair value gap. It gets closed below, so there's your inversion. Stop loss goes at the high of the candle, that original candle of the old fair value gap that got inversed. So stop loss right there. And then, yeah, you enter on that close, targeting. I'd probably target the end of these bodies, personally. That's what I would do, 1.6 to 1. But if you wanted to, you could have targeted the low. That would have been 2 to 1. So once again, a lot of that comes down to personal preference. I would probably go break even, like at this low, because once we come here, we shouldn't stop. And then, yeah, you can see we end up running all this, which is low resistance. So here's break even, here's low resistance liquidity. So yeah, I like this one a lot. Unfortunately, I didn't take it, and I probably should, but left trading is harder than it looks, and it's hard to be perfect. But every day I'm going to get a little better, and I do think this was a nice trade. DNO took this. I'll show you his execution real quick. He says, SMTs are the key you are looking for in your trading study. And yeah, anytime you have an SMT with an inversion, it's always going to be like amazing. So very good trade from DNO. And the last thing I want to talk about is, let's say, since I wasn't sure, right? I wasn't sure about that 3 minute. What I could have done instead, right? I honestly, I probably should have taken this trade because this would have been beautiful. But we already know the 3 minute inversed. We have a BPR right here. So 2 minute BPR. So that's where a bullish fair value gap and a bearish fair value gap overlap. So right here, that's the BPR. And then on the lower time frame, after we've already gotten SMT, swept out this high, and we've inversed the 3 minute, right? This 3 minute has already inversed. We have to remember that, right? Higher time frame, it's in line with the higher time frame inversion. We end up coming back up, pushing into this 2 minute BPR, and then we come back down and we close below both of these. So if you haven't seen that video where I talk about you can use 2 fair value gaps as 1, go watch that. But since we close below both of these on the 32nd, this would be an inversion, and boom, close below, enter right here, stop loss. I probably put stop loss right where it's supposed to go at the old, the high of the candle that created the old fair value gap. And then you can see how this would have been way higher RR. Now, once again, I like to be conservative. I like to just target 1 to 2R, but pretty base case would be this down to this low here, and that would have been 2.5 to 1. So yeah, that's about it for the main trades of the day. Now, there's a lot more, maybe smaller ones you could take, but since I'm trying to just make these videos and pump them out, I'm not gonna get too in depth yet. My main focus is just making these every single day. So, but yeah, hopefully you like this video. If you like this, definitely consider liking, subscribing, and checking out my completely free Discord. Link to that should be in my bio. So, yeah, hopefully this is helpful, and I'll see you guys later. Bye.